My name is Richard Wolanski, and thank you for joining me. Avation's an aircraft leasing company. Our customers, the airline industry, have been severely impacted by the COVID pandemic, and the company has worked hard to implement a strategy to deal with the fallout. The purpose of this presentation is to provide you with a situation update and also provide some insight as to how to look at Avation at a time when markets are panicked, arguably broken, and share price has been discounted. And although Avation has bounced back a little bit, it's still trading at about half of its previous highs, and I think that that's unjustified, and hopefully I can provide you with some further insight for you to be able to make up your own mind. Slide 2 provides a standard legal disclaimer. Slide 3 provides a current snapshot of the company. Avation owns commercial passenger aircraft, which it leases to a diversified group of airlines around the world, with over half its monthly revenues coming from the Asian region. We have 48 aircraft with 19 different customers in 15 different countries, in fact. We have a diversified fleet with 18% of the fleet being large aircraft, 46% the most popular narrow-body aircraft. And in this time where domestic routes and regional travel seems to be king, 36% of our fleet are turboprop aircraft. Fleets are very young at 4.2 years old and has an average 6.8 years to run on their leases. The book value of the fleet is over $1.3 billion. And importantly, the fleet has $871 million in unearned contracted revenue, of which only $70 million relates to Virgin Australia, and the other airline, which is in administration, which is a customer of ours, is Braathens. These are currently, so it's less than 8% of our future revenue related to those airlines, which, Virgin used to be a much bigger customer of ours. And both of these airlines are making steps to restructure and expected to fly again in the coming months. And that's a very important point, because our share price has been discounted quite severely because of those administrations. Importantly, 15 of our 19 customers have returned to flying already. And I'll also give you a bit more information on our customers and how they're coming out of the pandemic situation, because I think you need to be granular on each of those in order to truly value our company. By way of update, earlier in the year, Avation announced that it engaged with multiple interested parties as part of a strategic review and formal sale process, following an unsolicited approach just after Christmas by a bona fide offeror. Because of the pandemic, it continued to disrupt business activities. The board concluded that the formal sale process was unlikely to produce an outcome that accurately reflects the long-term value of the company at a value that is attractive to shareholders, and the process was terminated. And that's largely not unexpected. And there aren't too many people in the world buying businesses in this environment. And so that being dealt with, we sort of now focus on what we've done in our company in terms of dealing with the pandemic. We just released last week some financials. I'll quickly touch on this in this slide. So for the 9 months to 31 March 2020, we wanted to produce a set of numbers that gave investors an idea of where the company was really at the start of the pandemic, to show you that we're in a strong position, that our long history of growth and profitability continues, and that we had a strong cash position. And so this is where we are at for the 9 months. Total income grew by 14% to just over $100 million, and lease revenue grew 14% to $99.6 million. Profit before tax, $46.4 million. With bottom line profit of $38 million. Cost of debt continued to decline to 4.5%. Fleet assets, as I mentioned, were $1.3 billion. And importantly, our cash position was $1.6 million. We had already paid out a dividend for the first half of the year. And so we were in a strong position now to ride out the storm that is this COVID pandemic. So what have we done? Avation's strategy for COVID-19 is about maintaining liquidity and maximising cash flow and preserving that cash. We've taken a very pragmatic approach in focusing on maintaining that cash flow at a time when customers are suffering a major disruption, especially a couple of months ago. They are starting to come out of that now. We're a first mover in working with our airline customers to help them through this short-term difficult environment, with the goal of remaining cash positive all the way through it. And the support that we offered airlines is by way of allowing them to defer a portion of their monthly rent for the short term. It's not a rent decrease, and it's not a rent holiday. They need to repay all of that deferred rent, and typically that'll happen by the end of calendar 2020. Now, to balance the reduction in this cash flow, we implemented those 3 key strategies in the blue ovals there to maximise our cash flow. The first has been and the most important one, with the assistance of our key lending banks, adjusting the amortisation of senior debt associated with the fleet. And most of the banks have allowed us to go interest only for the short term. The second has been to reduce our cash expenses by lowering general administrative expenses. And while we are targeting a broad lowering of costs, specific actions include the elimination of employee cash bonuses and a deferment of executive director salaries for the short term. The third step has been to reduce our capital outgoings. This includes a capital expenditure moratorium in 2020 with no new deliveries of aircraft into the fleet. And this is just about preserving liquidity and maximising cash flow. And by managing these cash flows, Avation will navigate through the COVID-19 pandemic beyond the short term and position itself for opportunities in the post-pandemic world. And the strategy can survive a prolonged impact, even though the world does seem to be coming out of it, but perhaps except for the US, because all we've done is lower our cash outflow to match our lowered cash inflow. It's important to note, if you look at our geographical spread, that of our future revenue, 62% of our customers and revenue is located in Asia, and that includes, luckily for us, countries that only had minor impacts of the virus, including Taiwan and Vietnam, which are a couple of our major customers. A further 33% of the revenue comes from Europe, where in recent days, governments are opening up and airlines are flying far more than they were even 2 or 3 weeks ago. As of last week, European traffic was back up to about a third of pre-COVID levels and continues to rise significantly each week. Our customers include 7 different flag carriers, and while flag carriers are not excluded from the impacts of the virus and associated travel restrictions, these airlines are most likely to generate some government support, which where it's offered, and it highlights the importance of the national carrier. These airlines also have a high proportion of domestic routes, and so they'll be flying back again sooner than the other airlines around the world. And we are seeing this to be true in the route data that we are getting from our customers. And now the forecast short-term negativity in passenger traffic has been mitigated by our airlines. Most of them are laying off people, and they have much of their cost structure is variable costs. So they're minimising employee, fuel, government charges, and all these things are low or zero when their fleets are grounded. They've reduced capacity by handing back old planes, and not that that's happened to us, but we've certainly seen that with other lessors, and any other planes that they are able to get rid of. Fortuitously, the grounding of the Boeing 737 MAX hasn't allowed airlines to grow when they wanted to grow last year, and that's great because it means that those planes would be underutilised today as well. So that's been unfortunate for those airlines that they didn't commit to them. And now our job with our customers is to remain vigilant, monitor the customer support that we're giving them, monitor their financial performance and how they're flying again. And if we need to support them again, we can, because we're able to. And because of our diversification, the risk to our business has been lowered significantly. And I think the key for the shareholders moving forward is to look at the health and the impact, the flights and the government support for each of those airlines on that page. And that will enable investors to form a very strong view as to the value of our company, and enable you or allow you to consider that the share price has been overly discounted. And I know the UK has had 3 years of Brexit, and followed by being hard hit by COVID, and I can't fix the share price overnight. But what we will continue to do at Avation is keep providing you information on each of these customers, keep providing you information on how they're returning to flight. Also, look out for news that, as we've seen this week, Virgin Australia has been sold to a new investor and will start flying again. Support for our airline customers was that we made deferral agreements with 15 of our customers. The remainder effectively didn't want or need our help, which is a very important point. Generally, we've only deferred a portion of their rent for 3 to 6 months, and they typically have to pay, as I said, by the end of calendar 2020. They'll continue to pay maintenance reserves, but as I said, most of our airlines are using their planes and continuing to fly. And most of our big customers are actually flying at about 50% of pre-COVID levels already. And that will continue to rise as the weeks continue. And also importantly, that we have no planes due to be handed back to us for over a year. And so when you add up all the deferred rent that we put to airlines, keeping in mind that we'd already earned $100 million of revenue for the first 9 months, we'd only deferred about $16.7 million of revenue. How do we match that with the banks? Well, we worked with our senior lenders to adjust the amortization profile of our senior loans, and that obviously enhances our near-term cash flow and liquidity. We've made agreements that we're now putting in place with our largest bank lenders, and compared to that $16.7 million of rent deferred, we've been able to reschedule over $26 million of loan amortization. So we're net cash positive on these arrangements that we've been making. Banks have been very supportive of Avation, given our long-standing relationships and our professional approach to managing the business through the pandemic. And that's been very important. Our overtures to the bank have been well received, because you have to remember that banks are dealing with dozens or hundreds of problems, in fact, from businesses all around the world. So when we offer them a solution, they're very, very keen to grab it. We're not asking for any loan holidays either. We're going to pay everything back as well, but we'll do that when we get the money back from our airline customers. I'll just update you on Virgin Australia, because that's been now moving ahead very, very quickly. And our share price suffered significantly when Virgin went into administration in April. But as of last week, there is a binding agreement to sell that airline to Bain Capital, with it returning, well, was still flying, but returning to major service in August, so less than a month away now. And that will be a significant airline. So we need to look at how Avation has dealt with the 13 aircraft that we had exposure to with Virgin Australia. Now, those 13 aircraft were some of our older aircraft. They're at the end of their leases with Virgin, which means that they'd largely paid themselves off. So of the 13 aircraft, the total debt associated with those aircraft is only $45.9 million, with a book value that significantly exceeds that. And against that $45.9 million, we have security deposits and maintenance reserves already of $8.2 million. So the net deficit to that is around sort of $37 million. Now, our initial claim against the administrator for lost rent and return fees and all of those things that we have to take care of is over $97 million. And the unsecured creditors will get some payout. So, we will get some further return from the administration itself. But importantly, in the last couple of weeks, we've made concrete positive steps to deal with some of those aircraft at Virgin, and they are now away from Virgin and the administration, because the new Virgin will be a smaller airline. So we've taken steps to take some planes away to help facilitate that. So if we look at the 13 aircraft in particular detail, we had two very old Fokker F100s that have been flying miners up to the mine sites in Western Australia for almost our entire existence. The administrator has agreed to buy those planes off us. There was a finance lease originally in place with Virgin, but the administrator could have walked away from that. But he's agreed to pay for those, and we will get above book value for our plane. Now, keep in mind that Avation today is trading at about half book value of its on a book to price basis of its share price. And so anytime we sell planes for above book value, that is a good buying signal. And we've done that with those two Fokker F100s. Now, then we look at the 5 ATR 72-600s. They're worth about just over $77 million. And the administrator and the bidder has advised that they will be continuing regional routes in Australia and expected to retain those aircraft and use them in Virgin Mark II. So those planes will continue to have a home. So that's seven of the 13 planes effectively having a home in the future. And that leaves the 6 ATR 500s. Now, we had already sublet a couple of those, which we've done directly since the administration, because that sublease was done through Virgin as well. So again, we've approached that airline directly, which is an Australian airline called Heavy Lift, and we've leased 2 of those planes direct to them, and they're flying with them today. We've also, in the last couple of weeks, found a new airline in Asia that is looking for one of those aircraft. So we found a home for 3 of those, which means that our exposure to Virgin is effectively those last 3 old, almost 9 years old ATR 72-500s that we are continuing to look for homes for. So there's a very little debt associated with those planes. And so we think that the Virgin administration, we've dealt with the planes, we've dealt with our exposure. The airline is coming back on stream. It has a new owner with deep pockets. And so we think that the discounting due to the Virgin administration has perhaps been overdone. And these are the buying signals that you should see when that airline is sold, when there are indications that they're going to continue to use our planes, and the planes that they're not going to use, we find a home for. That means that Avation is continuing to get those assets out there and continue to earn revenue and earnings for shareholders. This is a really important slide which focuses on our sort of key customers, and there's a bit of information on this slide, but it is the major slide before I'll finish off the presentation. So domestic travel is starting before international routes, although we are seeing a real return to Europe just in the last couple of weeks. I believe in the last week alone, European air travel is up 25% from a week ago. So our young fuel-efficient fleet is designed for domestic and short-haul routes, and that's why a majority of our fleet is still flying, and that means that airlines are generating revenue and earning profits, and that's the key for our survival, and that's the key for their survival. And so what I'm asking investors to do is look at the pie chart, look at those key customers, and look at how those key customers are coming out of the pandemic and continuing to fly. So the first, we've talked about Virgin and how we've dealt with that issue. So we move along to Vietjet, which is our next largest customer. Vietnam has dealt amazingly with the COVID pandemic virus. It's reported no deaths. Vietjet's returned. It's flying all its domestic routes. It flew over 2,400 flights at the beginning of June, and that was up from about 1,000 flights 4 weeks before that. So Vietjet's doing extremely well. It continues to rise in airline rankings. It continues to do extremely well safety, and is one of the few airlines on the planet that's flying all its sort of domestic routes. Then we move along to Air Baltic, which is our next largest customer. And we had in the last week, the European Commission confirmed the Latvian government's €250 million investment in that airline for 10% of that airline. So that's a survivor. That's continuing to fly. All our planes are being used there. So we think that's strong. If we then move along to, we know that Air Baltic's now flying over 240 flights a week. And you got to remember that a month and a half ago, these airlines weren't flying. So they're getting back on stream extremely quickly. With Philippine Airlines, our next largest customer, the government's got a 1.3 trillion peso government support package bill for the various tourist industries and so forth. So that's in front of the Senate. So we are hoping and expecting that Philippine Airlines gets some further government support. Our next two largest customers, which are both in Taiwan, which are Eva and Mandarin, they didn't even ask for any financial assistance. So they have very strong balance sheets, very strong cash positions. And so if you look at the majority of those airlines there, which represent about 73% of our revenue, they're all doing quite well, or certainly coming out of the pandemic. And if you look at Air Baltic, Vietjet, Eva and Mandarin, they're all flying at above 50% pre-COVID levels, and they represent over 60% of our future unearned contracted lease revenue. And that's the most granular look I can give you into our airlines and how well they are doing. And so we're actually lucky with our leasing customers in that they are in good geographies, they have come back on stream well, they are supported by their governments, and because we're a relatively smaller lessor to some of our competitors, we don't have massive exposure to the US. We don't, in fact, have any exposure to the US. And the other countries around the world that are being hit hard by the virus, including yourselves in the UK, our exposure there is relatively limited. And so we understand how the market would react to an airline leasing company, and we understand that the market would react quite negatively, and the share price would come off. But if you continue to watch over the next coming weeks how these airlines continue to grow their flights, continue to perform well, those countries are coming out of the pandemic. Taiwan, which is a country of, I think, 24 million people, only reported 443 cases and 7 deaths, I believe. Eva and Mandarin's the domestic airline there. They're flying all their routes and continuing business on as normal. So we think it's important for shareholders to focus on that, look at that. Don't just associate us, at airplanes and with airlines. You need to look at the particular airlines behind who our customers are and who are generating revenue for yourselves as shareholders and earnings for yourselves as shareholders. So just to finish off the presentation, we've put in a strategy to preserve our liquidity and maintain our cash flow. We've supported our airline customers, and in turn, we've been supported by our lending banks. Air travel is returning now at quite a rate of knots, as I indicated with Europe. And with some countries like Taiwan and Vietnam has returned, now for over a month or so. The buying signals for Avation stock are when we sell planes above book value, as we've done with the two Fokkers, when airlines return to service, as we're seeing with Vietnam, as with Vietjet, as we're seeing with Air Baltic, EVA, Mandarin, as we see the two airlines in administration, which are Braathens and Virgin Australia, recapitalise and expect to start flying again in the next 2 months. These are strong buying signals for our stock, which is now trading about half what it was pre-COVID levels. So we're determined to maintain our franchise. We think there'll be plenty of opportunities in the future post the COVID environment. We're not looking to spend on growth and spend too much of our cash flow at the moment. We're quite happy to be conservative in this very, very tough time, and especially if there is a second wave of things like that. So that's really all I've got to say about Avation at the moment.